Ooh, here we go. Getting ready to get started already. Brandon, what's happening? Let's go back over to here. Do this. Do that. Do this. And let's do this over here. Here we go. Okay, Peter Williams. How's it going? Jen Pizzo, Israel. Rich Bruner. Rich, you beat the... Oh, you built Jill. He beat you. Anyway, Lee, what's happening? Boston Dragon, Gary, Jim Bibby. How's it going up there in Boston? You guys getting cold yet? Sup? Jeff, Dan Slam. Okay, let's get out of here. We don't want that. We want this right here. Okay, this. Not that. Right over to here. And there we go. Oh, bloody raw eating. Hello and good evening. Gone fishing, not working. Gotta love that name. That's cool. Frankenstein, haven't seen you in a while, brother. How you doing? Joseph, Red Baron, John Shine. Okay. Scooter, Norm, Ducks, Jim Bibby. Freaking cold. Yeah, it was delightful today. I was thinking of getting going out in a t-shirt. How you doing? Dun, 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 dun. James, Shade, Dali. What's happening? Brandon, Tracy, how are you all doing? Yeah. I gotta have at least. All right. So we got a little bit of a situation. Tony, how you doing? Got a little bit of a situation. Now we're not quite sure whether TikTok is going to be around in a couple of days, but here's the thing: I'm starting to move some of my sites off, into other morning. Morning? Really? Okay, it's got to be morning somewhere. Derek, what's happening? Email Jerry. All things really. All right, Timothy, how you doing? Mike, Coastal Paradise, how are you doing? Johns. All right, so that being said, all the introductions are there. You guys keep on coming. Let's get started. My name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly free India. Okay. I don't do politics. Please don't start. Okay. I'm just here for dividend investing. That's it. Thank you for that. Eric, what's up? Eric Armstrong, a business motive. Cool. Interesting name. Camulo, de Grasa. Nino, Jill. All right. Sam. Oh, for one. M. Okay. Interesting name. All right. Lindarella, back again. How are you today? Let's get started. John Miller. How are you doing, John? Hello, James. All right, let's get started. I have no clue what happened today. Now, I'm just sitting in front of my computer just now. Just got the #1 gifter badge. Cool beans. Way to go, Eric. All right. Motif. Eric, I have no idea what motif means. You got to give me a stock symbol if you want me to look it up. Do you think I would die if I eat a bar of soap in 2 milliseconds? That's uncalled for, but thank you. You going to Red Note? I have no idea what Red Note means. Okay, send me a link in the description. All right, send me a link. So I'm kind of curious. What is Red Note? But why? Look at this crowd. What do you doing? Oh my goodness. No. Costco. Okay, see, JQ, Costco's a little out of I have no problem whatsoever saying Costco is a little out of my price range. Here's a question I got for you. Red Note is Chinese TikTok. Okay, but isn't TikTok Chinese TikTok? Red Note, the new TikTok after it got shut down. Okay, so I guess we're going to go there. Why not? Red Note looks like another Chinese platform. Well, alrighty then. Well, you know what? I really have no idea what's going on. Does anybody really? There is another channel broadcasting you right now. It's the 10-Minute Trader. Yeah, I know. That's my other channel. I have 2 of them. I have 2 TikTok channels. The 10-Minute Trader and Dividend Stock Talk. Because the 10-Minute Trader is a little bit different. Had a question over here. Doreen. Hey, Coach. Hope you are well. Wise advice do you have for us tonight? I'm not quite sure how to take that, but okay. Oh, good. Just checking. Yeah, see, I have oh my goodness. If you can possibly name it, I probably have it or had it. I still have my MySpace account. Can you believe that? MySpace. I still have it. All right. That being said, so let's get back on track again. My name's James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow, taking you along for a good business idea, please. Okay, how are you? I'm fine. You are speak in Hindi. No, I do not speak in Hindi. Sorry. It's not my demographics. I still use my AOL email. Okay, what do you think about GSY? What the heck is GSY? Let's check it out. GSY. GSY. That's an ETF. That's going to be a no right off the top. Okay, look at that. Look, what the hell do you call that? No idea what you call that. I am fine, invest right. How are you? How do you get the dividends? Nomad, I'm not really looking to get. Let's go on this one. What do I think about GSY? Okay, GSY is going to be a no. Dang, the only thing I have is diabetes. Oh, wow, that's horrible. How do you get dividends? Okay, Nomad, dividends are a portion of the profits the company gives you just for being an investor. Okay, Alpha makes no sense at all. Hog, a big update today. Really? Well, let's take a look at it. Well, wait, speak dividends. Here we go. We're going to take a look at Harley Davidson, HOG. I'm not quite thinking that's a huge update, but let's take a look at it anyway. Any AI stocks with DE? No. Please look at ATIA. Okay, I can almost guarantee with 100% accuracy, ATIA. Okay, see that? We can't find this symbol. AITA is going to be a no. How many Walmart stocks are you buying today? None. All right. Please suggest a best I don't do Forex. NVIDIA has very small dividends. Yeah, 1 penny. No, thank you. You're right. Not huge up, but at least the first day to the up is what I meant. Well, that's a good thing. Do I read the Greeks? Nomad. Okay, see, I get a little bit of an issue with some people throwing out certain things without actually knowing the, what do you call it? The baseline, so to speak, or knowing the parameters. Thoughts why stock market has been down. Stock market hasn't been down. Okay, stock market goes up, it goes down. That's what it does. Don't know why you would think it would do anything other than go up and go down. Okay, so let's go back to Harley Davidson because somebody wanted to take a look at Harley Davidson, and I just so happen to own some Harley Davidson. So let's take a look. Here's the high way up here at 44. The bottom was today, but today was an up day. Good. Due diligence. Absolutely, Michael. Thank you very much for that. But Harley Davidson, here we go. A year ago, we were at 33. Okay. Shoots all the way up to the top at 44 before dropping. Look at the last 90 days. Now, the last 90 days is the last 3 days. Yeah, I actually have a soundboard. I just got it 2 days ago. I have no idea how to use it, but I will get it soon. Okay, I'll have it right here and give you a good old soundboard. Okay, anyway, here we go. 90 days ago, okay, we're at 37. Drops, goes sideways, drops again. Here's the bottom right here today. Today is the new 30-day bottom. And it is up today. Well, it opened up, and then she's up a little bit higher. Yeah, Roxy, NVIDIA has horrible dividends. La, 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 la. Do I read the Greeks? Nomad, I do not read the Greeks. Now, Nomad, here's the reason why I don't read the Greeks, okay? Now, the trading strategy I am about to show you. I came about it in 2008. Do you have to own the stocks to do a covered call the way you trade options? Yes, you do. You got to own the stocks to do a covered call. All right, so back to you, Nomad. The Greeks, that's the Delta, the Vega, the Theta, the Rho, and I think there's another one or two more. But the Greeks only have to do with the option pricing and how it moves up and down. Definitely something that we're not doing. Now, listen closely. In 2008, about 15 years ago, my 9-year-old daughter, okay, she's 26 now. She's going to be 26 now. She jumps on my lap and says, "Daddy, what are you doing? Can you teach me?" I thought that was a little odd for a 9-year-old wanting to trade stocks, but here we go. To teach a 9-year-old how to trade stocks and not lose money, it has to be simple. It has to be safe. It has to be predictable, consistent, and no way for her to lose. So that's 5 criteria. Okay? So, simply put, never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options are a must. And the numbers got to work. Nothing at all about the Greeks whatsoever. Let me quickly demonstrate what do I mean. Okay, Harley Davidson, at this moment in time, it's at $28.65. That's the current price at the moment, if I want to buy it first thing tomorrow morning. Now, $28.65, the closest strike price, because we're doing covered calls, because remember, simple, safe, predictable. Well, there's only 2 strategies that are simple. The first one is just buying the stock, but there's no predictability to it because you have no idea which way it's going to go. Well, the second one is called a covered call, where you buy the stock and sell somebody the rights through a call option, a stock call option, for them to buy it from you for the exact same price they just paid. And then you get to collect the premium. That's what I'm looking for. I'm not looking for a 9-year-old to try to understand the Greeks. That's like asking them about the Black-Scholes pricing methodology of standardized options. It just doesn't work. All right? So, if I'm doing $28.65, the closest strike price is going to be the 29. All right? Well, the 29 is going for 15 cents or 20 cents. Neither one of those is 1%. So, that's not going to be that good. But here's the thing. If I wanted to do it, right, I do, the 29s, pick up 15 cents. That's 0.5%. Now, 0.5% every single week is still 26% per year. I mean, think about it. Before you came here, before you landed here and known there's a possibility of getting 50% or higher, when's the last time you ever got 26%? Well, Harley Davidson's an American icon. They're not going anywhere. And I own a bunch of them. I like to get rid of them. I like this baby to turn around and go back up. Well, that's what she's trying to do. She gets to a certain point. The last 30 days would be 12, 13, 12, 13, 12, 13, right there. Okay, so here's the last 30 days for Harley Davidson. Now, you can only have one 30-day high, and you can only have one 30-day bottom. Well, here it is right here. Your 30-day high was 30 days ago. Your 30-day bottom, well, that was today. So what normally happens when you have a 30-day high? Well, you have profit taken and the stock drops. Well, here it is right here. Okay? What usually happens? Usually, it starts to accumulate, turn around, go back up. Well, in order to do that, we got to find the bottom. Well, this could be the bottom. We could have another bottom tomorrow. We have another bottom the day after that. Hello. So I like 2 days to the upside because that isolates the bottom. 2 days going up, we'll say, all right, this is the bottom. Now she's turning around. Not quite there yet with Harley Davidson, but I still own it. All right, so I still have to play the game. I still got to trade the options against it to have that cash flow rolling in. All right. One more day up for Harley Davidson tomorrow. Time to jump in. Only if the numbers work. Okay? Craig wants to take a look at Tractor Supply, TSCO. TSCO. Okay. Well, Tractor Supply, that chart looks rather interesting. Does VOLX wagon make sense? No, it does not. All right. The bottom of the year, that was a year ago. The top of the year, that was in October. Now she pulled back a little bit. I'm looking for 5 things when I look at a chart. The high, the low, where was it, where is it, and what's the direction? Up, down, up, down, up, down, up, down, up. So it's going up now. Okay, that's plain to see. You can see that. Now, the 1-year chart doesn't really give you any idea of what's happening tomorrow or the next day or the next day. Vague idea, rough. But we'll get to that in a minute. What are we currently buying it for? $55.99. So the closest strike price, 56. So the 56 is going for 10 cents to 15 cents. Well, hell no. No, the number just doesn't work. Can you do your program on diamonds, spiders, and the Qs? How about no, no, and no? Dude, you're new here. You definitely don't know how this works. Andre. So the German car maker, Volkswagen, does not have good numbers. No, it does not. In my humble opinion. You got to remember a couple of things. Okay, you don't have to, but if you're going to make the most of your time here, okay, number one, I'm retired. I'm not looking for capital appreciation. There's a huge difference between capital appreciation and cash flow. Two totally different mindsets. So, capital appreciation. You buy a stock and it shoots up. That's capital appreciation. Okay? Cash flow, well, the stock doesn't really go anywhere. It just stays in one little, up, down, up, down. Not a lot of movement. But they share their profits. Okay, you have two different types of companies. First of all, there's 9,813. There may be more, there may be less. The number changes every week, and today's only Tuesday. Okay, last Tuesday, there was 9,813. That's a lot of stocks. Okay, but I'm only looking at the companies that are consistently profitable. Specifically, 20 years, 2 decades. 20 years of consistent profits. That's what I'm looking for. Okay, so a lot of things I like and a lot of things I don't like. So Alcon, I'm going to tell you why I don't like DIA, SPY, and QQQ. Let's see if you can grasp it. All right? So by looking at that, it gives me an idea that you're not really looking for cash flow. You're looking for overall appreciation, okay, which is not something I'm looking to do. Okay, the spiders, the Qs, and the diamonds, all overall stock market movement. You're definitely in the wrong place, dude, because I'm looking specifically for cash flow. Those 3 positions are not what I'm looking for. But let me show you why. Now, you're going to see everything's the same, okay, between the stock prices and that. And Andre, last week, a lot of stocks sold, and the S&P went below 580. How did you adjust your portfolio according to what you're holding? Okay, dude, you're new here. You have no clue what I'm doing. I don't have anything at all to do with the S&P 500, the Dow Jones Industrial Average, or the triple Qs. Nothing. I buy a good quality stock. I sell it to someone else to buy it from me from the same price I just paid for it. I'm looking for cash flow. I'm looking to catch the premium, which is this number right here. Now, this is not going to tell me what I want you to see. What I want you to see, you might have a difficult time with this, but, it is what it is. So let's go on over to Yahoo Finance. Now, Yahoo Finance, do you see this right here? SPY. This is the information on SPY. All right? Right now it's at $581.39. All right, fine. Look at the yield. You're putting your money in SPY and look at what it's giving you as a yield. Do you know what the word yield means? It's like a rate of return. You get 1.21%. 1.21%. That's horrible. And that's not for the week, not for the month, not for the quarter. That's for the whole year. You're making 1.2. You're better off putting your money into a CD. Okay? But why not the federal government? The federal government's paying 5%. SPY is paying 1%. Apologies, I remember now. My mind bleeped while I wrote that. Okay, Andre, thank you. Okay, so that's spiders, SPY. Okay, now let's take a look at DIA. DIA. Okay, the Dow Jones Industrial Average. Okay, DIA, here it is. 1.61. All right, so SPY is 1.31. This is 1.61. Okay, it's a little better. Okay, 1.61. And how can you possibly tell me that's a good investment? Hold on. The Q's are next. Q. Okay, Invesco QQQ Trust. Here we go. You've got to be shitting me. 0.66. Seriously, dude, what the hell are you thinking? 0.56. Okay? And the diamonds were 1.6. And the spiders were 1.3. And you think that's a good investment? Holy cow, dude. I feel bad for you. Okay, how long do you have to be an investor before you get dividends? One day. Oh, you are right. The numbers for SPQTGG are not good for cash flow, but only good for capital appreciation. You're absolutely right. And I'm not looking for capital appreciation. All right? So here you're basically just wasting your time. I'm looking for cash flow, not capital appreciation, because they take all the profits, put it back in, and the stock price goes up. But your yield is terrible. Okay, Mike, TD. What the heck is TD, Mike? TD. Toronto Dominion. Okay. I'm going to say no to TD because it has monthly options. And monthly options, they don't really work for me. Because you could only trade them once a month. And once a month is only 12 times a year. Well, 12 times a year at 1 or 2%, that's 12 to 24% for the year. Now, if I'm getting 1 to 2% for each option trade that I do, well, don't you think that weekly, 52 times, which would be 52 to 110% per year, might be better? I'm just curious. Okay? BNS. What the heck is BNS, dude? Okay, it's never good when I say, what the heck is this? Okay, BNS. That's another no. All right? Another monthly. That's another no. Only on number Pulse Chain. Never heard of it. Andre, Macy's and Kohl's are closing a bunch of stores, which is why they are on their way down. Okay, here's the thing, Andrea. Now, we known this was going to happen. We known this last year because the numbers kept coming in, kept going lower and lower and lower. Well, mainly because the current administration does not want to prosecute theft. Well, what's going to happen in a couple of weeks? Okay, when the orange boy comes in, he says, well, that just ain't going to happen anymore. Well, Kohl's, Macy's, and Walgreens, well, they were losing their asses because of theft. People walking in, stealing a bunch of shit, and walking out. Well, what's going on there? All right, no prosecuting theft is running rampant. So they're finally, maybe it's going to come to an end. Maybe they will. Okay, so let's keep on going. Roxy, seems like automobile stocks decline over time. Okay. Well, let's take a look. Ford. All right, well, Ford's at 971 at the moment. Okay, a year ago we're at 12. Let me fix that so I can see it better. That's better. Okay. A year ago we're at 11. We shoot up to 1460, drop down to 950. Now we're back at 971 at the moment. Well, let's jump in and take a closer look. The last 90 days, which is the last 3 months. The last 3 months, we're at 1040. We jump up, pull back, jump up, pull back, and now we're going sideways at 971. Okay. Yeah. Andrea, Macy's and Kohl's are under new leadership and going to be doing some restructuring. Okay. How would you buy options? Look at the charts. Okay. No, Matt, I'm not quite sure what you mean by that, but, it is what it is. I need a fan in here. It's getting a little warm. There we go. That ought to do it. Cool me off a little bit. All right. That being said, let's do this. La 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 la. Okay, so that's Ford. She thinks that the stocks goes down. Well, you can't really tell here because this is only 1 year. All right, General Motors. What's General Motors doing? Oh, wait a second. Let's take a look at Ford. The last 30 days. 13, right there. Okay, so here's the last 30 days for Ford. 30 days ago, we're at 1040. Now, tomorrow, that's going to drop off. So your new 30-day high is going to be right here. Here's your new 30-day bottom. Shoots up, pulls back. Now, today, even though today's bottom was lower than yesterday's bottom, doesn't mean it's not going to continue to go to the upside. Well, because that's what she's doing. She's down, turn here, and she should be turning around going back up. So Ford might be a good opportunity to jump in. I don't know. I like Ford. I did buy some Ford this morning. Okay? Because I like it where it is. Let's actually take a look at it and tell me what you think. All right? So currently the price for Ford is at $970. So we have two opportunities here. The $950, which is going for 27 cents, and the $982, which is going for 10 cents. So the $982 makes more sense because the $950, you're losing 26 cents off the top. And once you take 26 cents off of that, it's not worth it. But the $982, that one is, because that is over 1%, and that's what I'm looking for. A safe, secure, predictable, consistent 1% per week. That's what I'm looking for. All right, so let's take a look at it. All right, I'm going to change this to covered stock. And then we're going to do the 982s. Where do they, I don't know where they came up with that number, 982. I mean, think about it. How do you come up with a strike price of 982? That's a weird number. All right, so let's just do one contract and then crunch the numbers, see what it looks like. I like how this strategy forces you out of a position and take profit once your strike hits. Okay, this is a part of my trading I struggle with for years. You know, you're not the only one who struggles with that, because a lot of people, even when you do a covered call that's going to be profitable, and then you're out by Friday, if the stock goes up, people say, wait, I want to buy it back. I don't want to lose my stock. Why? You made your profit. Move on. Okay, that's the big one. That's a hard one for some people to understand, because we see that a lot. Well, James, if I buy that option back I sold, well, I have all that profit in the stock. It doesn't work that way, because as the stock price goes up, the option price goes up also. So if you want to buy that option price back, well, you're buying it back high enough to a point where it makes no sense to try to sell that stock. It just doesn't, because the numbers just don't work. Take your profit, say, thank you very much, and then move on to the next one. It's actually that simple, because a stock will go up, then it will go down. Okay, you buy it when it's low, when it's up, you sell. Say, great, when you drop again, because it will drop again, because that's all they do. They go up, they go down, they go up, and they go down. So it's not that difficult. Okay, when it's down, that's when you buy. When she goes up, that's when you sell. But where do you buy and where do you sell? Well, if you like a stock and you follow it, you should have a good idea of where it is as compared to yesterday, the day before, the week before, the month before. If you're going to be playing this game, well, then play it. Play it the right way. There's 9,800 different stocks. You can't watch all of them. Pick your favorites. Put them in a Rolodex and just roll them. Okay, you grab your profit, great. After you come back down, turn around, and I'll jump back in again. It's actually that easy. All right. 976 is the current price. We're going to do the 982s. Okay, going to buy just one. Okay, and I'm going to change this from a limit order to a market order. Now, a difference between a limit order and a market order. Well, a market order is filled at whatever the market's at this moment in time. And it's actually filled instantaneously. Like you put it up, boom, it's usually filled right away. A limit order will go to the market maker. He's the one who does the buying and selling. It goes to the market maker, and the market maker decides, well, do I want to accept this offer or do I want something better? Okay? All right. So let's actually do the trade, confirm and send. Here's what it sounds like, and here's what it looks like. You ready? Buy one covered call of Ford 100s, 17 January 25. That's this coming Friday. That means I'm going to buy this stock, Ford. I'm going to sell somebody the rights to buy it from me, which they can buy it if they want. More or less, they're going to give me a deposit, a non-refundable deposit, and it doesn't even get credited to their purchasing. A deposit for me to hold it till Friday. So it means once I take that deposit, once I collect that premium, I can't do anything. So if the stock shoots up tomorrow, I can't turn around and sell it because I already gave somebody the first right of refusal to buy it. That's what a stock option's about. Okay, you're selling somebody else the first right of refusal, so to speak. Okay, so if I'm buying it here, 976, and I sell somebody the right to buy it from me at 982, and this thing shoots up to 12 or 15 bucks tomorrow, I can't do anything about it because I've already sold my rights away. But that's what I want to do because I want that safety, I want that predictability, I want that consistency. Okay, I want to make sure I'm getting 1% every single week. So if the stock shoots up, I don't really care. And it's hard for a lot of people to understand that. Why don't I care? Well, because I'm making my goal. My goal is the safe, predictable, consistent 1% per week. Well, fine. If the stock goes up, wonderful. Good for that person. It just shows me that the whole program works and people are going to keep doing it. Wonderful. Keep the money machine rolling. If it works, great. Don't fix it. Okay, I grew up in the 60s, 70s, and 80s. If it works, leave it alone. Simple. If it works, leave it alone. So, if this works, great. Buy the stock. Buy one covered call, Ford 100s. That's the weekly, 17 January 25. That's this coming Friday. The 982 call strike against the Ford stock at the market to open. That's the order for tomorrow morning. Okay. First number you see here, that 963, that is the break even. So if I'm buying it at 976 up here, and I'm selling the rights for someone to buy it from me, my break even is 963. So if by this Friday it's above 963, well, I'm in a profit. How much of a profit will depend on how much further above 963 it's going to close. Well, at this moment in time, it's at 976. Well, the 982 is only 6 cents away. Can it move 6 cents to the upside between now and Friday afternoon? Well, it's 4 days. Of course it can. But is it going to? Well, to be honest with you, I really don't care. Isn't that weird? Because as soon as I fill this in, as soon as I send it in, it gets filled at the market. Now, the nice thing about doing a market order with a covered call, you're buying the stock and you're selling the option at the exact same time. The premium is already built in. So the premium and the stock price are already tied together. Now, I could do it separately, maybe make another penny or two per share. It's always per share. So it's not always 1 penny, it's 1 penny times 100. It's not always 5 cents, it's 5 cents times 100. Because each contract, one contract equals 100 shares. 5 contracts, 500 shares. All right. But always go back to the basics, okay? Per share. All right. My maximum profit for this particular trade is $18.50. Now, I know you're probably saying, if the option expires at 3:59 p.m. Friday afternoon, well, the most amount of time you're going to have, okay, XRP, no. The most amount of time you're going to have available is going to be as soon as the market opens Monday morning. Monday morning, 9:30 a.m. That's when the bell is, 9:30 a.m. And the bell is at 4 p.m. on Friday. So at 3:59 p.m. is the absolute last moment you can make a trade. That's the most amount of time. So Tuesday, you already lost 20%. This strategy also keeps you from staring at the market all week. Sunday evening, get your new stock ideas, research. Monday morning, make your trades, and then check periodically through the week. Yeah, exactly. Okay, you actually get it. That's it in a nutshell. You do all your trades on Monday. Well, because you do your research on Sunday. Monday, you do all your trades. Tuesday, Wednesday, Thursday, you just peek a little bit, see what it's doing. Okay? And Friday, you decide what to do. We buy houses. Cool beans. I don't have any houses to sell you, but I'm glad that you buy houses. Someone's going to buy them. All right. So here's the trade. Now, $18.50 is going to be the profit. What is the trade going to cost me? Well, cost of trade, including commissions, $964. So, $964. Destination obsession. Oh, one of those old heads that don't believe in crypto. You'll regret it. The world's changing, buddy. You know what? I am 100% behind you on this one. I know the world's changing. I know we're moving to cryptocurrency. However, what you don't understand, cryptocurrency has only been around for a few years. What, 10, 15, most? 20, if you're lucky? Okay. Yeah, Bank of America, Wells Fargo, AT&T, Ford, General Motors. I can go rattle on. They've been here for 100 years. The stock market itself has been around here for 400 years. It's a typical teenager. Okay, you can tell it's a teenager because cryptocurrency is not even 20 years old yet, which means it's probably a teenager. They think everything rotates around them. Well, it's a great idea. It's a great plan. But you explain to me in a manner in which I will understand, okay, which I can portray to all these people here. How do you invest in cryptocurrency to get a simple, safe, predictable, consistent percentage on a weekly basis without having to sit in front of your computer all day? Until you figure that out, then come talk to me about crypto. There are no rules in crypto. Okay, there are no regulations. It's like the Wild West. You go out there, you stake your claim, and you get your guns out. Yeah, no thank you. Until you figure out a safe, predictable, consistent way to invest in crypto, don't bother me. Seriously. Okay? And if you think about it, us old people, yeah, we're the ones who created this for you. So don't be so arrogant and thinking you know everything. Hey, don't get me started. All right, so if my profit's going to be $18.50, I'm going to divide it by what does it cost? $9.64 per contract. Well, great. What is the rate of return? Well, the rate of return is 1.9. That's close to 2%. Now, 2% is 100% per year. Okay, 2% a week is 100% per year. Yeah, James, I get it. Crypto can't be valued fundamentally. I understand that. Okay, I do. And I love the idea of cryptocurrency. I do. I think it's an awesome idea, but that's all it is at this moment. It's an idea. Okay, people made a lot of money in crypto. People lost a lot of money in crypto. Until you figure out a way where it is simple, safe, predictable, and consistent, I want nothing to do with it. Okay, now the stock market's been around for 400, not 400 years. Okay, 1602 was the first dividend stock sold. Okay, that's 423 years ago. 423, and cryptocurrency is not even 2 decades old. So get off that high horse, buddy. It ain't gonna run. All right, anyway, 1.9%. That's almost 2%. 2% a week is over 100% per year. Simple. Okay, if it makes sense, sure, fine. All right. That's Ford. I like Ford. I did buy some Ford this morning because I like it when the numbers work. If I can get 2% on Ford, which is only $9, okay, which is only $9.76 per share, and I can get 2%. Well, 2% is not bad. Why would I look at stocks like Costco that are $1,000 a share? That's a long way to fall. All right, let's keep on going. How would you buy options? Look at the chart. Okay, Nomad, thank you. Get closer to the mic. The mic's down here, and yeah, I walk around a lot, so I'm not 100% sure how that's going to work. All right, we're going to look at Tractor Supply. All right, let's keep on going. Got 32 questions to take a look at. I jumped in last week on CBS. All right, what is CBS? Let's get out of here first. Get out of here. Let's 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 go back to here, and let's put in CBS, because I have no idea what CBS is. CBS. Viacom. Uh-oh, reconnect. Having issues. Issues with YouTube. Okay. Andrea. CBS has no dividends. Has no options. What's your take on BPOP? Banco Popular? Okay, Our Family, BPOP. Never heard of it. BPOP. No. That's my take. Okay? Monthly options just don't work. Now, when I say I want simple, safe, predictable, consistent 1% per week, the only way you're going to get 1% per week on a monthly optionable stock is to sit in front of your computer all day. Andre, a great day for CVS. All right, let's take a look at CVS. CVS. Okay, here's our last 30 days right there. Okay, Andrea, here's our last 30 days for CVS. We got our high over here at 49, drops down here to the 43 area, gaps up not once, but twice. So what do you think is going to happen in the near future? Okay, take a look. At 43, or even at the 44 area down here at the bottom, because it stayed there for about 2 weeks, from 44 to 51. That's $7. Now, $7 is not a lot of money if you think about it, but how much, percentage-wise, is $7 on a $44 stock? It's about, what, 16% maybe? That's a big jump from here to here, 16%. Now, I will take profits at 1 or 2%, but this thing jumped 16%. That's a lot. Okay, so you have to think to yourself, if this thing jumps 16%, is there going to be profit taking? Maybe there will, maybe there won't. Yeah, I see you. Why? Yeah, I see it. Please don't do that. If you have something to ask a diligent question. All right, there we go. All right, MPW. So let's take a look at MPW, because I actually have MPW. MPW. All right, so let's take a look at MPW. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down. Right now we're at $3.94. All right, well, $3.94, the 4 is going for 11 cents. That's over 2%. Well, 2% is a good number, I think. It's like we said a little while ago. 2% a week is over 100% per year. Now, I like the idea of 100% per year because it just works for me. Where can I buy those t-shirts? My neighbor and I have been dabbling in your strategy for a few months, and I'd like to buy him a shirt. You're not the only one. I should really put them up online. And, cause I don't even have a merch channel. I have no place for people to buy stuff. Cosimo, what's happening? You know what? Drop me a link, and I'll get you a shirt. Okay, just send me a message saying this is so-and-so. I want to get one of these shirts, and I'll make sure you get one. All right? All right, that's MPW. Lee. Now, I like MPW, so let's do a practice run on MPW, see what it looks like. All right, a year ago, we're at 333. Okay, we bottomed out for the year at 293. That's the bottom of the year, 293. Well, we got a double top at 657. Now, that's a 100% increase from the bottom here a year ago, last December or last January, to the high of the year at doubled in price. That's a 100% increase. Well, then it came back down again, and then it went back up again. Now it's back down here again. Okay, fine. Fine. Well, let's take a look. Okay, we bottomed out at 290. Is that right? Yeah, 290. And here's the top right here, 650. All right, last 90 days gives me an idea of what we can expect for the upcoming weeks. All right. So 90 days ago, 3 months ago, we had a high at a little over $5. Look, as she drops here, shoots back up, pulls back down, makes a new bottom today. Today is the new bottom. Could it be a change in direction? Well, it could be. Tomorrow will give more confirmation if it's one up. But look at the price. $3.94 is close to the 4. And 4 is going for 11 cents a share. Now, I know 11 cents a share does not sound like a lot of money, but it's over 2%. And over 2% every single week is over 100% for the year, if you're okay with the company MPW. All right? And that's a big question. Do I like MPW? Does it make sense? I feel like I owe you a few dollars. We've been averaging 1 to 2% a week. I'll send you an email. You know what? Send me a regular mail. Stuff some cash in that envelope. No, I'm glad you're doing well. Seriously. That's why I'm here. I'm here to help, let's say, demystify, the stock market, or a little tidbit of it. There's so many different strategies out there. Find one that works for you. If this one works for you, great. That's why I'm here. I'm here to share. Now, I did a whole year last year, every single day. This year, I said, all right, I'm going to do it again, but I'm not going to do every single day. I'm going to take Friday and Saturday nights off. So it's 5 days a week, 3 hours a day. All right, so let's keep on going. All right, Lee, we already did MPW. I like MPW. It is on my list. Should I full port Spider? You have to tell me what you mean by that, but I would stay away from Spider if you're looking for cash flow, because it doesn't work for cash flow. Capital appreciation, maybe, if you want to wait 5, 10, 15 years, because the Spiders are only paying, 1.6%? 1.6% for the year. What's my thoughts on ASML? ASML. Interesting. Now, believe it or not, I do try to stay away from stocks over $300. This one is 727. 727. Okay. I mean, I can make 2% a week on Ford, and that's under $10. And you want me to take a look at a $700 stock? Well, I better be making a shitload more. That's all I got to say. All right. 727 at this moment in time. It's actually in a downturn. Okay. The 13th, right there. Okay, so 30 days ago, we're at 720. We shoot up, pull back up, back down. Here's our 30-day bottom. It's 647. Gaps up huge. Gaps have a tendency to fill. That's what this is over here. Okay, she shoots up, 780. Now we're back down to 720. Okay, the 730s are going for 1240. Now, 1240 on a $730 stock, well, that's not even 2%. So I'm not quite sure why I would do this, okay, if I'm not getting the percentage. Because here's the thing, okay? Okay, Tom, even if I did jump in this thing, and this thing jumped $50, $50 is not even 10%. $50 on a $700 stock. Yeah, $50 is not even 1%, is it? No, 10%. Okay, yeah, not even. So I can do 4 to get 2%. This one, I'm getting 1 and maybe a quarter. That doesn't work for me. All right, and I'm not looking for capital appreciation, so that doesn't work. It goes up over time. Alcon. Yeah, Alcon. I remember you mentioning something about QQQ, DIA, and SPY. Yeah, dude. You're in the wrong place, dude. Seriously. You're looking for capital appreciation. This is not it. Okay, the 3 you labeled, DIA, diamonds, which is the Dow Jones Industrial Average. Okay, fine. Okay, spiders, which is S&P 500 ETF, fine. QQQ is another ETF. Great. Well, all of them are crappy rates of return, if that's what you're looking for. Have you tried any automation with your stock list, any scripts to help locate stocks that are ready to buy? No. I'm terribly sorry. I have seen enough Terminator movies. I want nothing to do with that AI stuff. Sorry. It's just a personal belief for me. Okay, it may be taking over the world. And that's one of the reasons why I want nothing to do with it. Okay? But you probably could. But it's not something that I want to do. You know, I'm old school. I take a pencil, piece of paper, I write my stuff down. I do. I write stuff down. I don't trust computers as far as I can throw them. I just have no choice in the matter here. Because when you phone them in, it's like $25 per trade when you phone them in. Yeah, Alcon, I know it goes up, but still nothing I want. SPYI, yeah, no. Same ball of wax. Same dog, different set of fleas. All right, ASML, SPYI, no. All right, Comic Bees, SPYI. I don't know why I keep having to explaining to you people. 12% yield, that's 1% per month. And I don't know why you think 1% per month is good. SPYI. So you're right, the yield is 12%. Okay? But let's check out the dividends and see how wonderful the dividends look. Okay, we go to historical data. Now, historical data gives me the open, the high, the low, the close, and the volume for the last 20 to 50 years. So every single one is going to be in there. Okay, so here's SPYI, dividends only. Now, I want to take a look at all the dividends going back 20 years, 2 decades. Because if I want a company that's consistently profitable, now why isn't this giving it to me? Okay, so apparently hold on, Michael. SPYI has only been around since 2022. Okay? September 21st, 2022 was the first dividend. It paid 49 cents. Then they dropped. Okay? Went down. 47, 48, 46, down. 47, 47, 48, 49, 50, 51, 49, went down. 49, 47, went down. 50, 51, 50, 49, it went down. 51, 56, 52, it went down. So this thing has been paying out dividends for the past, 3 years? And you think that's good? 12% yield, 1% per week? It's like, why am I wasting my time showing you how to get 1% per week, not 1% per month? There's a huge difference between 12% yield per year and 50%. If you like 12, hey, more power to you. I personally like 50%. All right, Michael, you have to keep telling them because they are too lazy to look up the information themselves. Thank you, Michael. I don't think a lot of them would appreciate that, but I'm glad you said it and not me. Simone is in the house. Way to go, Simone. KB, what's happening? Okay, so Brad Wood. What amount could you make roughly on $500,000? Well, that's $250,000 a year. Yeah, Michael, I got that. Truth hurts. So Brad Wood, $500,000, 1% a week is $5,000 a week. That's 50% per year. That's about $250,000 to $270,000 per year on 500 grand. But you got to do it yourself. This is not something you hand to someone else and say, "Here, do this for me." It doesn't work that way. Okay, most people will give their money to a money manager, a fund director, or somebody like that. Say, "Here, you do it." They're not going to have the same interest in your money that you do. So let's keep on keeping on. Jay, could you please show me how to access the chart on my computer? Yeah, Jay, but I have no idea what computer system you're using. Okay. So, Jay, that's something I would do on a personal level through a Zoom call. So I'd send you a link, and then you and I would get on together, and I can show you from your. But you have to know how to use the computer. So if you can't access the charts, and I don't know what computer system you're using, I don't even know what brokerage you got. Eric, business work. You drive a Ford. Okay, I drive a Dodge. Raffaello, don't understand. If the strike price is below what you paid, is your stock immediately called away? No. So Raffaello, what was I saying? Okay, let's go back to, what was that one I was showing you that did that? Hold on a second, if I can think. I don't remember which one it was, Raffaello. Was it CVS? No, it wasn't. It wasn't CVS. Raffaello, what I'm going to tell you is that when you buy a stock, here's the price, right? Now, let's say hypothetically, if I'm buying it, now this is not going to work because that number doesn't work. I forget which one I was looking at. Does anybody remember which one I was looking at when I said that? Because you got to remember, Raffaello, just because you buy a stock, okay, and then you sell somebody the rights to buy it from you, it's the premium, this number here, that you're collecting. That makes up for any deficits. If I buy it at 976, selling at 950, but this number here makes up for that loss, well, then that makes sense. I don't know if that made sense. Calls aren't assigned until the time runs out unless dividend is imminent. Okay. Is this like scalping? It's kind of like scalping in a little different way. Gracias. That's awesome. Gotta love it. It's guaranteed. Nothing's guaranteed except for death, taxes, and disappointment. Get rich slow with control. Eric, I like the way you put that one. What do you look for on an early roll? I got assigned X last week because it went up so much. The Bear Jew. Not quite sure I like that name, but hey, if it works for you. Now, I guess watch the debit amount? No, not necessarily so. What you got to keep your eye on. Okay, let's go back to here. Okay. What you want to keep your eye on is the MPW. Okay, what price did you buy it at? What strike price did you sell? And what was the premium that was collected? Because once you add the premium to the stock price, that is the break even for whoever bought it from you. And if that break even is low enough, then somebody may just exercise their option and take it away from you. So when a stock goes up, there's a distance between this and this that makes it enticing for someone to call it on you. All right. Yeah, it might be a good idea. Not just the debit amount. Keep your eye on the strike price and the premium you collected. Once you add those two together, you compare those two added together to the current stock price. If the current stock price is higher than the strike price and the premium, yeah, it's time to roll it forward. Can you talk about yield max investments? Yeah, they don't pay a dividend, so I'm not interested. Okay, you have two different types of companies. One that shares their profits through a dividend, and the other ones that take all the profits, put it back into the company for capital growth. If you're looking for capital growth, you are in the wrong place. I'm looking for cash flow only. Okay, Eric, what's the minimum you can get? Encourage more viewers to share. Okay, like, share, subscribe, all that kind of nice neat stuff. I can do that. Okay, Eric, there is no minimum. Everybody has, with 1% leverage base, everybody has an idea in mind. How much do you have available for you to do it? That's totally up to you. Everybody's different. Everybody starts at a different place with a different amount of money. That being said, only you know what works for you. So I can't tell you what works for you. Only you can do that. DJT got to come down a little after ripping 20% today. All right, see, I don't do DJT for two reasons. Number one, it doesn't have 20 years of dividends, and number two, it's too new. All right. Lonzo Saunders, how are you doing? 5% interest with money on bank. I have no idea what that means, Jane. TXRP, put money in the banks, safer. Yeah, I don't do banks, kiddo. Rock the mic. I have no idea what that means. Duke Energy, John. John wants to take a look at Duke Energy, DUK. I don't know if I've ever bought Duke Energy. No, I haven't. And here's the reason why. Monthly options. Okay, there's a huge difference between a monthly option and a weekly option. And I'm pretty sure you can figure it out. Monthly options, one per month. Oh, got that little hat on my head. Okay, it's gone. Okay, monthly option, once per month. Weekly options, 4 to 5 times a month. So ask yourself a question. If I can get 1 to 2% with each option trade, is one trade per month or 4 to 5 trades per month? It's really not that difficult. Okay? Duke Energy, monthly. I don't like monthlies. I can only do it once a month. It doesn't work for me. The numbers just don't add up the same. All right? So it's like, would you prefer 12% a year or would you prefer 50% a year? It's actually a simple question. Okay, there's 52 weeks. If I get 1% every option trade, well, that's 52. Okay, but monthly, that's 1. 12. Yeah, no thank you. Andrea, we already looked at CVS. Okay. But Visa, we haven't looked at Visa yet. Oh, look at that. Okay. Here's our high 2 weeks ago, and it's in a fall. So it might be a good opportunity to keep our eye on it to see where the bottom is. Once we find the bottom, it'll turn around and go back up. Because whether you believe it or not, stocks only go in 2 directions. Up and down. That's it. Up and down. Every day, up and down. All right. Next on the list. Trying to find my notebook. There it is. Got my notebook. See, I write stuff down. So I'm going to write Visa down for a couple of weeks because it looks like she's going to drop and find a bottom relatively soon. So we'll look at Visa next week. All right, Visa, CVS, Siri. Siri, put the wrong letter and somebody tell him it's a I believe profit taken soon on CVS. Me too. The Bear Jew. I got the Bear Jew. I got X and was assigned when it rose. What is your strategy or what do you look for when rolling? Okay, so the Bear Jew, when you're rolling, okay, I tried showing it. Okay, let's go. All right. There we go. U.S. Steel, right here. Let's get out of that. Create a rolling order. Okay, let's get this out of there. All right, Bear Jew, you ready? When you're rolling an option order forward, okay, especially with think or swim, okay, you take your cursor, okay, your little cursor thing right there, your little arrow, and you bring it right on top of the stock that you're thinking of rolling forward. Right click, and then this little window opens up. The third one down, fourth one down, create a rolling order. Okay, you click on that, and that window opens up. Make sure you choose the right one because you might have more than one position in that certain stock. All right, what pops up is a 1 week roll because it's the very next one. Now, you can change the expiration dates. You can change the strike prices, and you can change the profit that you're going to collect or the debit that you're going to pay. Because when you're trying to roll forward, you have two opportunities. One is you're going to collect another credit. Two, you might have to pay a premium to be able to roll it forward, depending. Now, I don't like paying a premium, so I will change the dates. So if I buy back January 17, which is this week, and I roll it forward to next week, well, I can click here, because going from January 17th to January 24th, I'm only going to collect 7 cents. For me, that's not worth it. So let's change it a little bit. Let's change it from the 24th to the 31st, which is 3 weeks out. Well, now look what I'm getting. 98 cents a share. That's a hell of a lot more just by going an extra week. Well, does that make sense? Well, it depends. Where's your position? Do you want to hold on to it? Let's pull up U.S. Steel and see what it looks like. Okay, so here's U.S. Steel right here. Okay. Okay, this is only 60 days. This is only 2 months. Look at where we were. 2 months ago, we're at 36. Jumps up to the high at 42. Drops down, back up, gaps down, blah, blah, blah. Here's our bottom right here, just before Christmas. Shoots up, pulls back. Now look at the run from on the 3rd of January. Okay, a little bit up, higher, 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 and gapped up. And look what happened today. Nice movement today. All right, so where do you think you want to hold on to it? Because I want to hold on to it at least until 41. Okay, so I might want to go, another week or two out, but that's about it. Okay? So with that being said, you have to decide how long do you want to hold it and how much do you want to roll it forward. Okay, Edinburgh. Okay. Why only do options with dividend stocks? Only when you are generating cash flow using options with growth stocks too. Okay. That's a valid question. It really is. He wants to know why only dividend stocks. Well, I'm going to explain it to you. About 2 seconds. Hold up. Ooh, it's a little heavy on the honey tonight. All right. Why only dividend stocks? All right. You see this here? This is what you call an EX dividend calendar. You will not find any stocks that do not pay dividends on this calendar because it's for dividend stocks only. Okay? Now, a dividend is a portion of the company's profits that the company gives back to the investors. That's how this whole stock market started. Believe it or not, the stock market got its beginning in the late 1500s. A bunch of businessmen got together and decided they wanted to create a big, bad company like the world has never seen before. So they literally went door to door. Hello, have I got a deal for you? If you invest in our new business enterprise, we will give you a share of the profits. That was their pitch. Simple, right to the point. If we are profitable, you will get a share of the profit. It's the first time that the peasants were able to buy interest in certain companies. And this was the very first one, the Dutch East India Shipping Company. The first dividend stock share sold was in 1602. If you didn't know, the Dutch East India Shipping Company averaged 18% per year for 198 years before they finally went belly up. Okay? But 198 years at 18% per year. The dividend stocks. Okay, so the reason why the EX dividend calendar is important to me is just before this little green dot. Let me explain to you what it is. There's 4 dates to remember in a dividend stock when you're buying dividend stocks. Number 1 is the announcement date. Hey everyone, this is James from Dividend Stock Talk. Hey, we had a great year today. We made X amount of dollars, and you as an investor get X amount on this day. That's the announcement date. That's when they say, hey, this is who we are, this is what we did, this is what you're getting. The announcement date, that's the first date. The second date, there's only 4. The second date is the EX dividend date. That's the reason for the EX dividend calendar. It tells you when the last day the stock trades before the dividend is paid out. So why is that important? I'll get to that in a second. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. The 4th date is the payment date. Simple. This is when you get your money. Okay, so why is the EX date important? It's all a scam. Thank you. I love negative people because negative people make me smile. All right, anyway. The EX dividend calendar tells me when the last day the stock trades before the dividend's paid out. Now, before the EX date, the stock has a tendency to go up in value. So, if I'm looking at CLX, which is Clorox, okay, Clorox has been in business for over 100 years. Okay, they consistently increase their profits they pay to the investors. That's us. Okay, just before this date, the stock price goes up, usually 4 times a year. Well, because we are in the first month of 2025, also known as the first month of the first quarter, because there's 4 quarters: January, February, March, quarter 1, April, May, June, quarter 2, July, August, September, quarter 3, October, November, December, quarter 4. We are in the first month of the first quarter. Now, Clorox just so happens to pay their dividend on the 1, 2, 3, 4, 5, 5th week of the first quarter. There's 13 weeks in every quarter. And guess what happens when you get to 13? Well, you start back over at week number 1. Then it goes 2, 3, 4, all the way up to 13. And then it goes back to week number 1. It just rotates. Week 1, week 2, week 3. Then it gets to 13. Then week 1, week 2, week 3. Then it gets to 13. Week 1, over and over and over again. I think I get it now. It's more predictability. Yes. Yes. So, now you're new here. Because what I say to everybody, I'm looking for simplicity, predictability, safety, and duplicatability. So I want to be able to do it over and over and over again, and I want to be safe. Okay, I'm 60 years old. I don't want to have to go back to work. Now, I'm still working. I'm just not getting paid. Okay? It's weird. So you work, 40, 50 hours, 40, 50 years of your life, and you get a paycheck after every week. Yeah, well, no, it doesn't work that way. When you retire, you still work. You just don't get paid. Okay? I go to my mother's house. I work down there. I work at my son's house. I do stuff around here. I stay busy. All right. So I'm glad you get it. Now, the EX dividend. Now, the reason why I don't do the other stocks, because how do you know when they are going to move? There's no predictability in the movement with a regular stock. It's like Netflix, Amazon, Tesla, how do you know when to buy and when to sell? You got to look at your computer all day long. Because no, thank you. I don't want to spend all my day in front of a computer. So that's why I don't do stocks that don't have dividends. Because I want the predictability. Because if I know when they're going to go up, well, that just makes sense. That makes a lot of sense. With the week of a dividend payment rotating. Yep, I'm glad you like it, Denzel. Makes sense to why you keep a calendar. You can set things up in a way where you're getting a dividend multiple times a week. Whoa, nope. I don't go for the dividend. Hold on, Denzel. Or however you want, you can control. Yeah, okay. You're almost right. I don't want the dividend. I want to collect the premium because the premium is available every 7 days. The dividend is only available once every 90 days. So why would I want to collect just the dividend? So here's an idea. Denzel, check this out. If I know Clorox is going to go up in value just before this date, well, what if I bought it 2 weeks before on a Monday and I did a covered call? I bought it the market open, collect the premium, and then if it hits my target, well, I'm out with my profit. That makes sense, right? Well, if I don't do it, well, then I can do it again on this Monday and collect another 1%. And then if it doesn't hit my target on Friday, because remember, the options expire on Friday. So if I don't do it then, I get to do it a third time. And then I collect the dividend. So it goes 1%, 1% dividend. Now, 1% on Clorox. Well, how much is Clorox? CLX. Okay? Now, CLX is 160. So the 160 is between 35 and 215. That's more than the dividend. But I can collect that every single week. So why wouldn't I? Why wouldn't I collect a premium every single week rather than collecting the dividend once every 90 days? That's why I do covered calls on dividend stocks just before the EX date. Eduardo, yep, I'm getting your strategy. I might imitate yours. Well, that's why I'm here. I'm showing you guys there is a way of doing it. All right. Oh, did you get your new book finished? My book has been finished. I finished it last February. I just haven't put it up online yet. I probably should. Damn, I'm loving it. Well, way to go. I'm here every single night. Can you believe that? Every single night. Except not on Fridays, not on Saturdays. Now, last year, it was every single night. 359 days. I only missed 6 days last year. That's it. That's not that bad. 6 days all year. All right, let's keep on going. Fascinating. Billing, attorney, clerk, accountant here. Well, cool, Adrian. I'm glad you like it. Uh-oh. I missed some questions. Okay, let's go with some of these questions. Oh, okay, that makes much more sense. I wasn't sure if you were doing option or just being a holder to get those dividends. Oh, hell no. Because here's the thing, Denzel. Let's go back here for a second. Okay. As soon as the dividend is paid, okay, as soon as this dividend is paid, the stock has a tendency to go down. So stocks have a tendency to go up before the dividend date. And then after the dividend date, they have a tendency to go down. Okay, so jump in 2 weeks before, grab your 1%, move on to the next company. Michael, when you listen to what James is teaching, you discover it's pretty good strategy. Thank you, Michael. All right. Leadership is going to be in restructuring. Yep, got that one. Jumped in. Okay, got that one. Don't. Well, financial reports, not news. Yeah. Gracias. All righty. Okay. Nothing's guaranteed. except for death, taxes, and disappointment. I guess we'll watch the debit amount. Yep, that's a good idea. What's the minimum you can get started with? Yep, we did that one, did that one, did that one, did that one. Duke Energy, did that one, did that one, did that one. All right. What day is it assigned? It can be assigned any day. Oh, David wants to take a look at Altria. M-O. Let's take a gander at Altria. Altria, M-O. Sorry, Dave. Altria is in a downturn. Now, apparently, today, see the number right here? Today, now, for you guys that are new here and don't know this, the screen behind me, this huge screen here, is live on YouTube. It has its own YouTube channel all by itself. There's me just in the little tiny corner right over here. That's me sitting in the corner on the YouTube channel. But other than that, this whole screen you can see live on YouTube. Because you probably can't see these little tiny numbers on your phone or your iPad. That's why this screen is live on YouTube, so you can watch it on your big screen TV. All right, let's keep on going. Asim, hello, my friend. Please advise your thoughts on Abelmal. Ooh, I like Abelmal. Okay, sorry. Let me do this one first. Darren Ireland. Hi, James. Can we take a look at ADI and see what you think? ADI. Not a good thing if I have to say, what the heck is it? Okay. ADI. Interesting. All right, here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Sideways, up, sideways, down. 214.25. Okay, the 215s are going for 225. That is over 1%, if that's what you're looking for. Okay, so got to ask yourself the question, do I like ADI? Am I willing to buy ADI and hold on to it for as long as it takes for it to hit my target? And I get to collect dividends on it all the time. Well, does ADI even have dividends? Let's find out. ADI. Now, this is Yahoo Finance. I always tell people you got to have a financial website so you can be able to check and verify information. All right. Why isn't this thing moving? Okay. Okay, maximum amount. I want to see all the dividends. All right, here we go. All the way back down to, ooh, look at that. 2003. Okay, well, let's take a look at ADI, Darren. You ready? 2003, 4 cents, 6, 10, 12, 16, 18, 20, 22, 25, 30, 34, 37, 40, 42, 45, 48, 54, 62, 69, 76, 86, 92. Nice! Did you see that nice increase consistently? I like that. Well, let's take a better look. This is not ADI. Here's ADI right here. Okay. So, a year ago was the bottom of the year, and that was 182.29. I gotta write ADI down. Okay. The high of the year, the low of the year, 182.15. That was back in April. The high of the year was 244. Look at the downturn since the high. Okay? Down, up, down. Okay. Look at where we are now. It's a little bit of a downturn. What's going to happen? Hold on. Last 30 days. Okay. So your last 30 days gives you a good, well, actually, the last 30 days gives me a good idea of what can I expect next week. Okay, so 30 days ago, we're at 216. We drop down to 206. That's the bottom right there. Shoots back up, pulls back down. Here's the high right here, 222. Now she's coming down. If you really like this, really like it, keep your eye on it. In the next couple of days, it should find a bottom, turn around, go back up again. So hypothetically speaking, next week, it could be a good position. Next week, not this week. Sorry. What programs you running? Adrian, it's not a program. This is a trading platform. Trading platform is just a place to go to check out your stocks. This is called Think or Swim, and it's through Charles Schwab. Okay? You can download it for free. Okay. Can you review closing your positions? You got to be a little bit more specific when you say that. Am I reading that right? No, Lonnie, why are you asking Bear Doodad to email you? I'm not quite sure about that. Okay, Clammy Talk. What are your top performing picks? Well, that would be Macy's, Nordstrom's, Kohl's, Ford, and MPW. What's up, Austin? Tiscar. Elec is the ticker symbol going at 10. Okay. All right. It's me again. Hello. What's the best to use covered calls or security puts? Well, Lonzo, it really depends on what you want to do. Now, the only strategy I teach here is covered calls. Now, cash secured puts, it's a great strategy also, but I don't teach it here because you can get a little confused when you start mixing calls and puts. David, Macy's price now below what I bought it for. Would you sell it in the money called? Yeah, but you got to go far enough away from where the action is so you're not susceptible if it turns around and shoots back up. And then keep your eye on it, because if it gets too close, you can't roll it forward into another week. Now, you can roll it forward as much as you want. You never ever have to have the position exercised or called away from you. Did we talk about Devon? No, we did not talk about Devon yet. DVN, Devon Energy. Ooh, nice movement. You see that? Take a look at that. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Follow your finger. Up, down, up. Well, it's going back up again. We found the bottom, we found the top. Now she's moving back up. 36.97 to 37 is going for 46. That's like 1.5%. 1.5% a week is about 75% per year, which means you could probably double your money in, 13 months? That's not that bad. 13, 14 months to double your money. All right. A year ago, we were at 47.55. No, sorry, 42.55. Oh, my eyes. My goodness. The high of the year, 55. That was back in the middle of April. Look at your last 90 days. So look at the same 5 things. The high, the low, where was it, where is it? Look at the movement. Down, up. Lovely. Gotta love it. The last 30 days. Well, the last 30 days is telling me it's a little overpriced, because think of the numbers, okay? Listen closely. Think of the numbers. 30 days ago, it was at 34. And it drops down to 30. Now it's at 36. Now the difference between the bottom and where it is now is $6. Now I know $6 doesn't sound like a lot, but do the math. A $30 stock, okay, a 10% move is 33. A 20% move is 36. This is 20% from here to here. If you don't think there's going to be profit taking in the next week or so, you're sadly mistaken. But I don't tell people what to do. You do the math yourself. Think about it this way. If you bought a stock and it jumps 20% in 1, 2, 3 weeks, if it jumps 20% in 3 weeks, are you going to take profits? I know I would. So me, I wouldn't be jumping into this. I wouldn't look at Dividend Energy for another 3 weeks, because it's going to take at least 3 weeks to go from here back down to here where I want to jump back in again. So I'm going to write Dividend Energy in my notebook for 3 weeks. DVN. All right. Okay, let's keep going. What do we got? We got 10 more questions. Secretariat, dude, I haven't heard from you in quite a while. Uh-oh, what was he saying? Uh-oh, I got to find Secretariat. He's in here somewhere. Okay, I seen that one. I drive a Ford. I don't understand. Blah, blah, blah. Yep, I got that one. Yield Max did that one. DJT did that one. Rock the Mic did that one. Siri. Got that one, get that one, get that one. Fascinating Billing Clerk here. Yep, gotta love it. All right, MO did that one. Darren, we did that one. Review positions. Well done, man. Thank you. Macy's price now below what you got it for. Can we talk about the volume? We just did that one. Secretariat, here we go. Hello, James. Still hold a few retails. Kohl's, Macy's, AEO. Can you show more historical data graphs? Okay, Secretariat, sorry. Think or Swim only goes back 1 year. That's it. Do penny stocks do dividends? No, they do not. Chris wants to take a look at MPW. So, Secretariat, let's take a look at Kohl's. And Secretariat, I'm not quite sure. Are you selling? Because see, I'm into Kohl's at 15, which is 1572, which is way up here. All right, so Secretariat, I'm into Kohl's way up here. Okay, it's currently down here. I'm at 15, almost 16, but I'm into it right now. It's at 13. So this week, I sold the 1450s right here. All right, I picked up 32 cents, which is over 1%, which is like what I'm trying to do. But I watch it twice a day, once in the morning, once at night. So I have a good idea where it's going to be. So I have no problem consistently selling premium, even though my purchase price is up here. I'm selling strike prices way down here. Okay, that's Kohl's. Okay, well, let's take a look at the other one, Macy's. Now, Macy's, I have no idea why you're still into Macy's. And I do have some Macy's, I think. Hold on, do I have Macy's? Not here. No, apparently I don't have any Macy's. All right, so I don't have any Macy's this week. So I must have sold all my Macy's. Imagine that. All right, so Macy's, oh wow, big drop. Wow. 1465, the 15s going for 19. So I'm going to be putting Macy's on my list to keep an eye on it. And what is it with this YouTube camera? It keeps going dead. Now, I like Macy's, I do, because last year it was my top performing stock. I got the most money out of Macy's out of all the other positions I've done. But this week, look at this, we got 22. Ooh, check that out. The 15 put, 27,000. 27,000 puts. And then 24,000 at 13. Wow. It's like nobody's doing the calls. Look at the put numbers. That must be that must be the put squeeze. Yeah. hell yeah, I'd do a 15. As a matter of fact, I think I will do a 15 tomorrow. It's paying 4%. Why the hell not? I think I will do that one. Thanks, Secretariat. AEO. AEO. Holy cow. Dude. Terribly sorry, man. All right. Well, here's AEO. I had a big drop today. Look at it. Gapped up today, but then she kept dropping. 1549. Okay, so what's the 16? Okay, 16's 9,000 shares. 11,000 17s. All right, there's a little bit of discrepancy. You got 11,000 calls, and you got 9,000, then 2,000, 2,000, 28, 28. All right, so it's 11, 13, 13, 14. It's 11. That's 12,000 to 13,000. Not that much of a difference. Anyway. Sorry about that, Secretariat. You should follow a little closer because I got rid of all those. Well, I still have Kohl's. I got rid of my Macy's and I got rid of my AEO. Okay, do penny stocks have dividends? No, they do not. Okay, Chris wants to take a look at MPW. MPW. Isn't that one we did earlier today? No, it's not. Okay. So MPW a year ago was at 290. All right, that's the bottom. Shoots up to 650. That's a 100% increase. We already did this one. So a year ago, she's right around 3. Does a 100% increase in 1, 2, 3, 4 months, 4.5 months. 100%. Pulls back down from 6 down to 375. That's a 50% drop. So it goes up 100%, drops 50%, and then from 4 jumps up 50%, and then drops another 50%. That's weird. Okay? Up 100%, down 50%. Up 50%, down 50%. Right now we're at 391. I can buy it tomorrow at 394, sell off the 4s, and pick up 11 cents. That's 2%. If you like MPW. And then only if you like blue. What's happening? Wakolda. All righty. Well, I'm glad you guys are doing well over there. All right, Tino, you have $1,000. How can you invest or trade with it? I'm a new beginner. Okay, now I'm going to tell you something. I'm going to tell everybody. I do not do cryptocurrency. I do not forex. I do not do quick, fast contracts, and I don't do futures. I don't do anything except for dividend stocks. Specifically, this. When I am online, I will tell you specifically. If you want to talk to me, if you want to have a conversation, drop me your phone number. I will give you a call personally. Okay, I don't have anyone that makes phone calls for me. I do them myself. I actually like to talk to people about their investing strategy. And it has nothing to do with the money at all. I'm not going to try to sell you anything. Do I have stuff to sell? Yeah, of course I do. But I'm not going to try to sell you anything. Okay, you want to talk to me? Drop me your number. I'll give you a call. And the weird thing is, between 8 and 20,000 people will come across this channel. Because I got 6 different sites going tonight. Between the 6 different sites, about 8 to 20,000 people will come by. And maybe only 1 or 2 will actually drop their phone numbers and actually want to have a conversation. Boggles my mind. I'm giving you information for free. So my advice to you, Mr. Tino, keep coming back every night. Keep learning. Keep asking questions. Don't invest in anything other than education at this moment in time. Education. That's it. Learn. Learn what it is you want to do. Learn what you need to do. And just keep adding to your little nest egg. Consistency and persistence over the long term, you will do fine. But you got to be consistent. If you're going to say $20 a week, fine, $20 a week. If you're going to say $100 a week, $100 a week. Consistently, every single week. Compound interest will boggle your mind in a few years. Sorry, CMBT, 63%. Compounded monthly. Okay. Papa, you got to tell me what that means. Okay. Sorry. CMBT, 63%. I have no idea what that means. Have you looked at Mara or Riot today? I looked at it this morning, but I haven't looked at it tonight. M-A-R-A. Meta. Here we go. A meta. Here's our high of the year. Here's our low of the year. Here's where we were a year ago. Here's where we are now. So let's take this up. Up, down, sideways, up, down. 1756 to 1750s. They're going for 59. That's over 2.5%. That works for me. 2.5% is 125% for the year. If you can get 2.5% every single week. Let's take a look. A year ago, now this is kind of silly if you think about this, because a year ago, hold that thought, Sean. A year ago, we're at 1777. Well, now we're at 1719. It's like, what was the point of the whole year? Nothing. All right. Anyway. High of the year, 34. So it actually doubled in price in 2 months. All right. So last January, she's at 17. 2 months later, she's at 34. That's 100% increase in 2 months. All right. Well, from 34, she drops back down to 14. Shoots back up to 27, drops back down to 13, then shoots back up to 30, and now we're back at 17. All right, so the last 90 days, last 3 months. High, low, where was it? Where is it? Up, down, pretty simple. It's in a downwards turn right at the moment. Not something I want to jump into. Okay, that's Marathon. Riot, R-I-O-T. Now, I do have some Mara, and I do have some Riot. Okay, so here's the Riot. A year ago, we're at 1089. Shoots up to 18. That's an 80% increase. From 10 to 80 to 18, that's 80%. Drops down to 6, which is a 66% drop. That's a huge drop. Okay? Jumps up 80%, drops 66%. You think that's weird, though, isn't it? Because look, here it is here, okay? From here to here is 80%. But from here all the way down to here, which is even lower, well, you'd think that'd be more, but no, it's not. Because from 18 down to 630, that's only 66%. See? Here's 80% up, 66% down, and then at 6, it jumps up to 16. That is 100. It's like 120%. Okay, 80%, 60%, 120, and then back down 16 to 10. What is that? 16 to 10, 16 to 10. A little over 55%. Weird. The numbers. It's just a numbers game. Jump in, jump out, get your little profit, blah, 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 yada, yada, yada. Okay, so look at the last 90 days. Let's go to the last 30 days. Let's just, get right to it right there. Okay. 30 days ago, we are at 1250, shoots up to 1450, drops down to 10, back up to 13. Now we're sitting at 1177. But it's still coming down. Okay? When it's coming down, just sit and wait and watch. Once it finds the bottom, jump in and ride the wave back up. But how you ride the wave, how long you're on it, well, do you want 1%, 2%, 3%, 50%? The longer you sit on it, the higher probability you're going to get knocked off. Sean, but you miss out on compound interest because you don't hold anything. All right, thank you for that, Sean. I see what you're saying. All right, I'm not looking for compound interest, Sean. I'm looking for a simple, safe, predictable, consistent 1% per week. That's what I'm looking for. I'm retired. I'm not looking for compounded growth. I'm not looking for capital appreciation. I'm looking for cash flow. Now, I'm assuming you're not retired. If you were retired, you'd probably be looking for cash flow also. Because I'm on a limited budget, which means I have X amount coming in every single month. Well, actually I have coming in every week. So the amount of money I have coming in every week takes care of all my bills. That's all I need. You have to decide what works for you. Are you looking for capital appreciation? Are you looking for compounded growth? Or are you looking for cash flow? That's some wise words. Why, thank you there, sir. I have what you cannot buy. Do you know what that is? Wisdom. Wisdom is not something you can buy. You have to earn it. The only way you can earn wisdom is time. Making wrong decisions. Because wrong decisions allows you to learn. And while you learn, you collect wisdom over the years. Does a put squeeze happen often? How can you spot who is behind it? True. Okay. See, a put squeeze, it's not that easy to spot them, but if you look for, holy cow, look at that. Holy shit. 22,000. 22,000 on the 10, all right? 11,000 on the 11, 10,000 on the 12. That's a lot of put options. But come over here to the other side. Look at this. 12,000 on the 10, 24,000 on the 12, 12,000 on the 13, 4 here, 3 here. That's a lot of options playing in this riot. Holy cow. Well, if you know how to play the game, then yeah, you can make a lot more money. But here, I teach one strategy and one strategy only. And I always tell people the same thing. Stick around, learn the one strategy first. Safe, predictable, consistent 1% per week. That's over 50% per year. Almost nobody gets 50% per year. But if you can get 50% per year, fine. Get good at it. Once you're good at it, then you can add in other trading strategies that may be a little more risky but have more rewards. Because it's always going to be a risk-reward ratio. Which one are you up for? More risk, less reward, less risk, more reward. I don't know. It depends. Everyone's different. You have to figure out what's right for you. Aye. All right. Bonti? All right. Have I looked at Myron right? Yes, we did. Raya and Merritt. There we go. Oh, Scotty wants to take a look at Wally World. WMT. Now, I take one look at something like this. I personally do swing trading. Cool beans. I love swing trading. However, with swing trading, you got to sit in front of your computer. I have no desire to do that. Okay, Scott. A year ago, we're at 50. Now we're at 95. That's almost 100% increase. Almost 100% increase. Look at, there's not very much profit taking. What do you think? You think it's going to be profit taking eventually? There's a little bit here, but not much. Way too much up for not enough down. Okay, stocks go up, stocks go down. Macy announced store closures today. Yes, we knew that was coming. Blue Heron Landscape. Back again, I remember that name. It's not a meme. Okay, Baker, I have no idea what that means. Okay. Oh, yeah, but still, I feel safe as an 18-year-old. Well, yeah, you're 18. You're totally oblivious to what world has to offer you. Purple Bitcoin. Cool beans. No. All right. Good evening from the Alabama Gulf Coast. How are you today? Sean, Who are you taking to the Super Bowl? Who am I taking for the Super Bowl? Oh, I have no idea who's even playing. Isn't that weird? No idea. I'm not into making money. I'm into learning. Well, alrighty then. Burn mechanism coded in the smart contract with halving. Yeah, I get it. But I don't do that. So it's not something I need to worry about. All right. Blue Heron Landscaping, how are you? Nice to see you. All right. Thanks for sharing your wisdom. You're welcome. Okay. Schaumburg Ill. I have 30,000 in my Robinhood cash account earning 4%. I'm retired with the rest in savings. Oh, I feel bad for you, dude. I really do. It's not a place you want your money. Yo, Uncle, how was Coke in the 80s? It was delightful. It tastes basically the same as Coke does nowadays. All right, Schaumburg. You have 30,000 in your Robinhood cash account earning 4%. That's horrible. Okay? I'm retired with the rest in a bank savings. That's even worse. Dude, if you really want help, send me a DM with your phone number. I will give you a call. We can chat. I'm not going to try to sell you anything. I just want to have a chat. Thanks for sharing your wisdom. Can you teach more risk, more reward? No. The reason being, Lost Wolf, okay? I am here, okay, teaching you this for free. No strings attached. I'm not asking for anything. Okay, I'll leave a like on you and say, okay, thank you, I think. I don't know, but thank you for that. Okay, Lost Wolf. The reason why I only teach one trading strategy, I don't ask for anything in return. I just want to share my wisdom. I'm also, documenting my journey here. Okay, this is for my children and my grandchildren. At some point in time, I won't be here anymore. So the wisdom that I have here, I want to put it on video for them to be able to access. You guys just so happen to be here to witness it or to be part of it. Maybe you can learn something. Great, that'd be wonderful. Because the interaction is kind of what I want them to see. You guys are regular people asking simple questions, and I'm trying to answer them as best I can. Okay, so I teach one strategy here for free and only one. It's the dividend investing for weekly cash flow using pre-qualified dividend stocks and stock options for a safe, predictable, consistent 1% per week. I'm giving that away for free. If you do it right, you can earn about 50% or more every single year consistently. Okay? Now, it makes you kind of think, if I'm giving this away for free, I do have stuff for sale. I'm not trying to sell anything. So if I'm giving this away for free, what is it that I know that I'm not giving away for free, that I'm selling? So that might pique an interest, spark an interest. I don't know. Maybe you might want. Okay. Now it's called liquid gold. Okay. Now it's called liquid gold knowledge. I feel lucky to have this type of knowledge. Well, it is lovely. Okay. Knowledge and wisdom is a wonderful thing. But if you don't use it, it becomes useless. Okay, that's like buying a car and letting it sit in the garage. Sean, so I don't really understand options. What happens when it does hit the price? So you lose all the money or just something? No. Sean, see if I can explain this in another manner, okay? You ready? Sean, let's say, hypothetically, you have an old car in your backyard. Let's say it's a Ford F100, 67 Ford F100. Nice truck. You push it out to the front. You slap a for sale sign on it, $3,000, best offer. All right, Tom, down the street, stopped by, said, hey, I want to buy your truck. Here, have this money, hold it for me until Friday. If I don't come back on Friday, you keep the money. Sell it to someone else next week. But if I come back on Friday, you sell it to me for this price. But you can't sell it until I come back or till Friday, one or the other. Thank you. Hoping to talk to you one day soon. All right, well, if you drop your number, your phone number here in the DM, I will give you a buzz tomorrow. I say that every night, and only about 1 or 2 people actually leave their phone number. It's weird. Even when I say I'm not trying to sell you something, just drop your phone number, we'll have a chat. If I can help you, great. I'll point you in the right direction. Pierce, thank you for that. So, Sean, in option, you're buying a stock. Can you explain the risk with options? Yeah, the risk is not understanding what you're doing. That's the risk. Even more risk is hitting the wrong button. That's the biggest risk, hitting the wrong button. Because I had somebody today text me and said, James, I think I did this wrong. What did I do? Hit the wrong button. Hitting the wrong button is going to be the major reason you're going to lose money at first. It sounds elementary, it sounds simple, but everyone does it. At first, oh shit, I sold it instead of bought it. Oh shit, I bought it instead of sold it. Same thing, I hear it all the time. People hit the wrong button. That's where you're going to lose most of your money at first. Okay? Yeah, the car thing is about the easiest thing I can explain. If you have a car sitting, the car's already paid for. You already own it. And you're just going to sell it to someone else. Can you explain how to understand the market psychology? Yeah, buy low, sell high. There you go. That's it. Buy low, sell high. Is the company profitable? Is it not? Do they pay dividends, or do they take all the profits, reinvest it back in the company? Are you looking for capital growth, or are you looking for cash flow? Okay, you can do a lot of things in the stock market, but you have to know what is it that you're looking to do. Okay? Are you looking for cash flow? Are you looking for capital appreciation? Do you want to put $5, $10, $15, $20, $100 aside every week or every month and watch it grow? If so, find a strategy that is simple and easy for you to understand, for you to do whatever it is you want to do. It's not that difficult. The strategy I'm teaching you here for free, no strings attached, was created for my 9-year-old daughter. As a matter of fact, we haven't seen her in a while, so let's pull her on up. Pull her on up. Come on down. All right, here we go. Going over to one of my web pages, going over to YouTube, to my YouTube channel. Yes, I have one of those, a YouTube channel. And you will see, Sean, can you explain the scenario where you lose money with options? You can use the car analogy. Yeah, sure. Okay, here's how you can lose money. Okay, and I'm going to use the car analogy. Okay, great. Let's say, hypothetically, you have a car, you want to sell, it's in the backyard. You bring it out the front, slap for sale sign on it. Tom from down the street comes by and says, here, take this $500, hold it for me till Friday. If I come back on Friday, I will give you all the money. If I don't come back on Friday, sell it to someone else. So here's the thing. Let's say, hypothetically, you took the money from Tom, $500, but you want $5,000 for the vehicle. Okay, 500 is only like 10%. Okay, let's say the very next day he sends a tow truck over to pick up the truck and he takes it away and you never get paid for it. That's how you can lose with that scenario. Well, in the stock market is another way of losing. Well, number one, besides hitting the wrong button, okay, not selling instead of buying, buying instead of selling, that kind of thing. Okay, you can lose by not paying attention to what your money is doing. So I'll give you an example. Hold on a second. Let's go take a look at the 9-year-old that I created this for. So we're going to go to videos. We're going to go to oldest video. All right, so.
Hi, I'm Jake, and as you being part of the internet website company, which my dad has like my whole that I do. Being part of that, you're going to be getting weekly lists of stocks I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that help you get the best return you want. List number 1.
That's me. Long time ago.
company paying out dividends instead.
Anyway. I always laugh when I see that. But look at all the hair I had. No gray. Oh, I miss it. Anyway. So that was my daughter. Now, be honest with you, she's 11 in this video, but I started teaching her when she was 9. Okay? When she was 9, she jumped on my lap and said, Dad, can you teach me what you're doing? Great. Simple, safe, predictable, consistent, 1% per week. That was the goal. 1% per week. That's over 50% per year. Okay? If that works, great. Why not? It's actually that simple. Okay? Now, it was created for a 9-year-old. It had to be simple. It had to be safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had to overcome. All right, so rule number 1. Rule number 1 is never buy something you don't understand. Uh-oh, that one turned off. That means we're almost ready to call it quits. Never buy something you don't understand. That's rule number 1. Rule number 2 is never sell at a loss. Okay? It doesn't make sense. If you buy something for $100, why would you sell it for less? It doesn't make sense. You're going backwards. Doesn't make sense. Don't do it. Rule number 3. Make sure the company is consistently profitable. Me, personally, I like 2 decades worth of consistent profitability. 4, weekly options are a must in order to gain 1% per week. Either that or sit in front of your computer. Only way you're going to do it. Okay? You're either going to use weekly options or you're going to sit in front of your computer all day. 5, make sure the numbers work. What are the numbers? Or what am I buying it for? What am I selling it for? Okay? What am I buying it for? What's the closest strike price that I can sell it for? And what kind of a premium am I collecting? It's actually that easy. All right, that being said, I think... Hey, Siri, TEPET hit 3.15. Okay. Don't know what that means, but alrighty. Let's see if we can reboot this without having to do anything. Why isn't that working? Come on. Oh, come on. Here we go. That one works. All right, so that one's working. What do we have here? That one's not working. Damn it. All right. Let's see. Keep doing this. All right. Internet glitch. Yeah, I saw that. All right. Adrian, $149 a month to run that program. I have no idea what you're talking about, Adrian. Teach me the one with more rewards. I'll appreciate. Yeah, no, ain't happening. Okay? Sorry. Behind you. Oh, this program here? It's not a program. That's a trading platform. Okay? It's just a trading platform where you buy and sell stocks. It's kind of like Robinhood, Webull, E-Trade, Just a Trade. 86! Dude, I'm just getting ready to leave. But it's nice to see you. How you doing? Everything going good? You have a good holiday? All that kind of nice, neat, fun stuff. All right. Let's take a look. Oh, wow. That burned going down. Adrian, forgot the name. I forget. Good to see you. I've made it a full year with you. Holy cow. You've been here all year? Hey, how did you do last year? 2024. How'd you do? Did you do over 40, over 50? What'd you get? All right, 86. I'm waiting. What you get? What you get? What you get? Bum, 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 bum. Here we go. January beginning and the end of the year. 40%. Cool. Good for you. How news impacts the market. That's okay. December 31st. Okay, so here we go. Okay, these are all my trades for last year in this particular account. Hold on. Steve, can the money you are using for this be kept in an interest-bearing account, or all you may use this week, is it kept idle? Okay, Steve, good question. Steve, I hate to be the bearer of bad news. Not many people agree with what I do. Okay, specifically, 98% of all my money is invested at all times. I leave no cash sitting around. None. I may have $400 or $500 sitting here and there. What do I need it for? Okay, my car is paid off. I don't drive it very much. I do have to get a new set of tires, but that's not that big of a deal. I don't have very many bills. Okay, I'm at that point in life where everybody wants to be, the golden years. I get plenty of money coming in every month. 98% of all my money is invested at all times. So the amount of money you're talking about, the interest on it would be negligible. Okay, so anyway. So 86, you made 40%. Cool beans, dude. How did you miss the 50? I made about 90%. I feel bad about that. On one account. All right, let's keep going. Here we go. Way down here. So 289, 146. Overall totals. All right, so close value. Okay, so the close value is 289, 146. Now, I remember I took out about $40,000 over the year. But look, 289 off of 140, because I started out the beginning of the year. Wait, where did I start at the beginning of the year? Okay, I don't need that. Let's go here. Okay. So here, I went from 117. I deposited another 21. I took out 48, and I still ended up with 188. That's freaking nuts. Okay, I haven't got all the numbers figured out for this one and figured out for this one, but I'm working on it. I'm not a big thing. But, that being said, that's a nice return. I'm glad you're doing good there, 86. That's great. 90. Isn't that nuts? 95% for this one and 80% on this one. That's crazy. Yeah, but then I'm doing it, I've been doing it for years. And that's good for your first year, 40%. That's not bad. But you know what, 86? I didn't get my thank you gift. Where is it? Must have got lost in the mail. No, I'm glad you're doing good, though. Thanks. And thanks for all that you do here. I'm glad you're doing good. All right. That being said, I'm going to call it a day. It's because I got all the questions. All the questions are done. There's not that many people here. Thank you for all you do, James. You're welcome, dude. I'm glad you're doing good. All right. So, all that being said, my name is James. This is Dividend Stock Talk. I'm going to be out here today. We're going to do the exact same thing again tomorrow. Bonti, last year I made $1,700 out of $200. Cool beans, good for you. Becca! How are you doing, Miss Becca? Lovely to see you here. All right. That being said, you guys have a great night, and I will catch you again tomorrow. All right. That being said, let's get out of here. Let's get out of here. And now, the end is near. And so I face the final curtain. New student. Well, how are you? Thank you for stopping by. I'll be back again tomorrow night doing the exact same thing. So I'll catch you tomorrow night. I'll say it clear. I'll state my case, for which I'm certain I've lived a life that's full. I traveled each and every highway and more, much more than this. Ooh, I didn't turn you guys off. I did it my way.